Globalization has been bad. The rest of the world makes more than $1 trillion more stuff for the United States that is not traded for things that American workers make. It's traded for our assets. A lot of times that's just our debt, ownership of equity, ownership of real estate. And so we are both hollowing out our economy today, losing the productive capacity, and we are giving away claims on our future prosperity. We are running up the national credit card. We are mortgaging the national farm, as Warren Buffett would have said. And a tariff is a very straightforward mechanism for ensuring that prices reflect the relative preference we should have for making things in this country.
Today's episode is brought to you by Teucrium. Learn more about how agricultural commodities can play a role in your portfolio by clicking the link in the description. Over the past few months, I have had many guests on who have said that the Trump administration's tariff policy is going to be a disaster. Today, we have got a very opposite view, and I'm really glad today to be speaking to Oren Cass, chief economist at American Compass and author of The New Conservatives, Restoring America's Commitment to Family, Community, and Industry. Oren, welcome to Monetary Matters.
Oh, thank you so much for having me.
Can you share your views on globalization and free trade, your views on globalization and free trade that probably about 10 years ago would have been anathema to the conservative Republican movement and now are close to, I would say, mainstream? What are your views on globalization? Has it been good? Has it been bad? Who has it helped? Who has it hurt? And why do you think it is time for differing views on globalization and free trade in the Republican Party and the conservative movement in America?
Well, I think globalization has been bad for the most part. I think it has certainly failed to deliver on the promises that were made about it. And a lot of the problem comes down to exactly the distinction between globalization and free trade. If by free trade you mean the thing that you learned about in economics class, where different countries specialize in the kinds of things where they're relatively more efficient and then trade those things for each other and both sides gain, I think that sounds terrific. And there are obviously plenty of examples where that kind of trade does take place and does benefit the American people, American workers, as well as the people in other countries. The problem is that what we've had with globalization is not that at all. And it's not that on two dimensions. One is that the kinds of things that we are trading in the global economy are not the things you learned about in Econ 101. If you think about Econ 101, if you took Econ 101, if you went through the example, it's almost invariably to agricultural goods, right? If you go all the way back to Ricardo, it was cloth and wine. My Econ 101 class, it was fish and sweaters.
Mine was fish and shoes.
There you go. The entire premise is that there are going to be these sort of natural specializations that make sense for countries to have. And again, that's great, right? America grows wheat, Mexico grows avocados. This obviously makes sense. In the modern economy, obviously, overwhelmingly what's being traded is manufactured goods. And manufactured goods are not something that have necessarily natural advantages in some places, right? Taiwan is not the leader in advanced semiconductor manufacturing because of the quality of the silicon on their beaches. Manufactured advantages is developed. It is developed by policy. And those things that you are better or worse in have incredible implications for the health of your own economy, the trajectory of your growth, and your national security and resilience as well. And so if you go back to the sort of Econ 101 model and say, my favorite example is like, well, Australia could specialize in kangaroo meat and, Japan can specialize in electronics and right. And like, isn't that great? And obviously, no. In year one, maybe that's great. But long-term, Australia is not going to benefit if it specializes in kangaroo meat and expects other countries to specialize in actual advanced technologies. And so we've had a problem where some countries have recognized this in the modern economy, particularly East Asian countries, Germany as well, and have chosen to invest in and specialize in those things that are really necessary to a healthy growing economy. And the US said it didn't care. And famously, Michael Boskin, who's an economist, was chief economic advisor for George H.W. Bush, was quoted as saying, "Computer chips, potato chips, what's the difference?" Right? And look, like that was actually the mainstream economic view. And if you believe that, then great. People who care about computer chips will specialize in that, and we'll get to make the potato chips, or in our case, the soybeans. But that is obviously not good. The second problem is one of balance. What happens if you're not actually making anything? You are trading assets for goods. And that's what emerges with the trade deficit. And if in fact globalization had happened as was promised, and China made things China could make better, And in return, we got great opportunities making something else for China. That might have worked out fine. But that's not what happens. In fact, the rest of the world makes more than $1 trillion more stuff for the United States that is not traded for things that American workers make. It's traded for our assets. A lot of times that's just our debt, ownership of equity, ownership of real estate. And so we are both hollowing out our economy today, losing the productive capacity, and we are giving away claims on our future prosperity. We are running up the national credit card. We are mortgaging the national farm, as Warren Buffett would have said. And so for all of these reasons, again, the basic Econ 101 model of free trade, if we can have it, where we have it, that's great. That's not what globalization is.
And what were the defenders of free trade who are in conservatives and liberals in the 80s, 90s, 2000s, 2010s? What were they saying about why this isn't a problem and why this is actually a good thing? And why do you think those arguments are wrong?
Well, initially, what they said was that this couldn't happen. I'm particularly fond of quoting Paul Krugman, who said one of the most important things you can teach people about trade is that trade deficits are self-correcting. There was a theory that because of other forces, currency adjustment, and so forth, obviously you couldn't have a situation where one country just ran $1 trillion trade deficits in perpetuity. I was actually on a podcast with him recently and read that back to him, and he conceded that was naive. That that was wrong. It turns out not to be true. And so part of the problem is I think people just did not conceive of the extent to which in the modern global economy with countries like China that could be simultaneously so mercantilist, so state controlled, and yet so successful that a lot of the assumptions underlying Econ 101 just were not actually going to hold. The other thing they would say, and that some still say, let's keep in mind, there are an awful lot of people out there still saying globalization was good, is good, this is going great, we should celebrate it. What they'll say is that you get more cheap stuff. And to the extent that it is the view of economists that the entire premise of economics is to maximize consumption, and again, they will say that. Glenn Hubbard, who was chair of the Council of Economic Advisors for George W. Bush, the Bushes picked great Council of Economic Advisors chairs, as you can see. He has said, look, economists see the point of the economic system as being to maximize consumption. And if that's true, and by the way, by the corollary of that being, you also want to minimize work, right? The optimal policy would be one where everyone can sit on the couch all day and consume everything they could want. That would, if you were scoring policies with economic models, that would come out as the best idea possible. And so in that system, if you said, look, if other countries want to make stuff more cheaply and subsidize it and exploit their labor and sell it to us for less than we can make it for, that's great. And why would you complain about it? And on its own terms, by the way, I think that's probably right. I think globalization has contributed to rising material living standards. If what you care about is the size of your television, how much air conditioning you have, and so on and so forth, I think it's safe to say that globalization did deliver on its promise. But that is not all or primarily what people care about. And that's why when economists, when policymakers were selling globalization, when they were selling embracing China, they didn't say, we should do this because we're going to lose a lot of jobs and hollow out our economy, but it's worth it for the cheap stuff. They said, we should do this because it's all to our economic advantage. We are going to get better jobs. We are going to see more growth. And that was simply incorrect.
One argument you hinted at it is that American workers who used to work in a manufacturing plant, they would move up the value chain, and through education and training, they would get higher paying jobs, probably more in the service sector than in manufacturing. Why has that not happened? Why hasn't that happened? And to take something of an extreme example, like if you look at a chart of textile manufacturing in the United States, used to employ many tens of thousands of people, and now infuse close to zero people. Why isn't that a good thing? That if there are people in Vietnam, and there are, who are willing to make T-shirts at a much cheaper price than any American citizen, non-citizen would ever do. Why doesn't it make sense to do that in Vietnam and then have us do other stuff here?
First of all, it's important to say the promise as delivered and as the models suggest is not that everyone's going to move up into services. It's that there's going to be some stuff that we can make more efficiently and productively with better jobs in the productive sector, right? If the pitch had been, look, guys, we're going to hollow out our manufacturing base. We're going to run massive deficits, not making things the rest of the world wants, but it's okay, you'll learn to code. I don't think that would have been a very popular pitch. And I think people also would have looked at that and said, oh, wait a minute, I'm not sure the people who could support a family working in manufacturing are going to learn to code, or that the places where they can support a family working in manufacturing are the places where they could get a job learning to code. And so, in fact, it's important to say, no, no, no. The premise here was that we were still going to make things. We were just going to make the things we could make most productively. And if the t-shirts go to Vietnam and we make the advanced semiconductors for Vietnam, great. But we have gone from a large surplus in advanced technology products to a massive deficit even in advanced technology products. So that didn't happen. It's also important to say, by the way, that with something like t-shirts, it's not actually entirely clear why the United States would or would not be a good place to make t-shirts. Now, obviously, to the extent that t-shirts are going to be a labor-intensive process that can't be mechanized or automated, you might say, well, we should offshore it. But even then, it's worth asking, well, wait a minute, let's take the Econ 101 folks seriously for a moment and say that everybody gets paid the marginal product of their labor. Labor might be cheaper in Vietnam, but if employers, if capital actually had to pay Vietnamese workers the marginal product of their labor, then paying wildly less productive Vietnamese workers wildly less money isn't actually a better deal than paying more productive American workers more money. The reason it's attractive to offshore isn't this abstract concept of cheap labor, it's exploitable labor. It's you have to pay workers a smaller share of their output in these other places. And again, that's not some magical force of comparative advantage. That's a set of policy choices. And it's a choice to say, no, we want to ask American workers who live in a country in a legal and economic system and culture where we actually value work, where we have labor and environmental standards and so forth. We actually think a quote free market is one where they have to outcompete an exploited Vietnamese worker coming out of subsistence agriculture, or if they can't beat that, then they don't deserve the job. So I think again that's all sort of wrong. And then the last point is just to say it's simply not true that the workers who could succeed in the manufacturing sector are the same people who are working in these higher value service jobs. It's true that the average service job pays more than the average manufacturing job, but David Autor and his team at MIT have just published very good work saying if you actually look at the particular people, if you compare a like for like worker based on demographic profile, education level, and so forth, region. In fact, the kinds of jobs that workers moved to when the manufacturing jobs left were worse. And that downshift has been extraordinarily costly, both to the individuals and ultimately to the health of families, communities, and entire regions.
And that is an element of your argument. You're an economic thinker, but there's also a lot of non-economic motivations for your policy. For example, you're not just, as you referenced, focusing on maximizing consumption. You're not focusing on maximizing GDP. You and the policies you articulate, you are focused on human welfare and the fact that if someone used to go to the factory and now they're unemployed, or now they're working a service job, that their material quality of life can be different. And can you just speak a little bit about that and how it can harm? You think it can harm families and
Yeah, I think it's important to say that I like consumption too, right? I'm not a degrowther who, thinks we'd be better off living in log cabins. But I think it's really important to recognize that human flourishing is not merely a function of consumption. And that if we think, the very popular metaphor is the economic pie, right? We're going to abstract the economy to a big pie. And as long as we grow it and everybody gets a bigger slice of pie, then we've succeeded because everybody likes pie. And the problem there is that it turns out that people don't simply like to be served a piece of pie. People's role in baking the pie, to stretch the metaphor maybe too far, is actually really important also. And that human flourishing is about not only getting to consume a lot of stuff, but about having a productive role as a contributor to the community, to the society, to be one who is serving the needs of others, who is producing as well. And that's incredibly important to people's own well-being. It's incredibly important to family formation, to, especially for young men, whether they get married at all. It's important to the outcomes for kids growing up in those families. It's important for the health of those communities, both in terms of, social investments in the community and also in terms of the economic vitality of the community. And then ultimately, when you get all the way up to the national level, it's really important to emphasize that, actually having a strong industrial base is incredibly important to national security and national resilience. And what all of those things have in common, you mentioned the new book we've just put out called The New Conservatives, and it talks about these concepts of family, community, and industry. And in some respects, it's like, well, that's kind of a funny set of three things to pair together. What they have in common is those are three things that are incredibly important to the health of both individuals for human flourishing and to the health of the nation. But they are not things that come with a market price. They are simply not things that markets optimizing for efficiency, individuals pursuing profit are going to consider in how they allocate resources. And so, I love free markets. I think it's incredibly important that we organize our economy around and private sector with markets, but it's also incredibly important to understand what they do and don't do. And if there are things that we care about that markets do not of their own volition do, then there's nothing conservative, certainly from the right of center perspective, in saying like, well, we just trust the market anyway. It's incredibly important to recognize what they do and what they don't do, to recognize what we care about, and then to recognize that there's an incredibly important role for public policy in bridging that gap.
Are you a sophisticated investor concerned about today's markets? With the ever present potential for stock market corrections and the risk that bonds won't provide the hedge that they used to, you may want to consider adding an asset class that has historically offered stability when you need it most. The prices of agricultural commodities such as corn, wheat, soybeans, and sugar typically move to their own rhythm, driven by factors like weather and geopolitics, not the factors that move more traditional assets like stocks and bonds. Since inception in 2012, every time the S&P 500 has had a correction of 10% or more, the Teucrium Agricultural Fund Benchmark Index has outperformed. Getting exposure to agricultural commodities has always been tough for individual investors. And while it's not possible to invest directly in this index, Teucrium offers ETFs designed to give investors price exposure to these markets. If you're a professional investment advisor or a self-directed investor managing your family's wealth, click on the link below to learn more about how incorporating agriculture into your portfolio can help diversification and protection. Thanks for listening. Let's get back to today's interview. What do markets do poorly or not do at all when it comes to globalization? Maybe I could frame it differently of saying they do it, it's just not a good thing. But basically a worker in the United States expects wages of 5x, and in Vietnam they can be paid X or even less than that. Capitalism and free markets say we should empower companies, or at least allow those companies to capture that labor arbitrage. You have already explained why you think that is a bad thing. I guess it's now move on to what do you do about it?
I'm glad you sort of focused that around sort of the incentives for companies, because I think that's exactly the right way to think about it. And the thing about capitalism, and you go all the way back to Adam Smith, right? Literally, he only uses the term invisible hand once in The Wealth of Nations. And in some respects, it's a very unfortunate metaphor because it sounds magical, right? The invisible hand, it's this thing we can't see. It does something. But if you actually look at what he says, it's much, much less interesting than that. He actually, the paragraph literally starts with him noting that people will prefer investing domestically to investing in foreign markets. And so that's sort of stipulation number one, is that that's true. Stipulation number two is that the thing that people are going to invest in that's going to deliver the best profit is the thing that maximizes output and employment. And his observation, because what he's doing is he's explaining capitalism to people. How does this work without central control? He's saying that in his observation, those two things are both true. And because those things are true, people pursuing private profit end up advancing the public interest as well. You don't have to have a law saying you must invest domestically, you must, invest in creating employment to get those things. Because if those are the things that generate the most profit, then people will do that anyway. And that's the invisible hand. And built right into it is this recognition that you do need those constraints. You do need that alignment between private and public interest. And if you release that, if you say, well, actually, the best opportunity to make a lot of money is shutting down the factory and moving to Vietnam. The best opportunity to make a lot of money is complaining you have a worker shortage and bringing in foreign workers. The best opportunity is to build nothing at all. It's just to go to Wall Street and trade piles of assets around in circles. Then that's what people will do. And you don't get to turn around and say like, well, boo, capitalism doesn't work. It's boo the people who stepped back and said, well, we don't need to worry about any of the constraints or structures of the market. Capitalism will work automatically. And so what this means for policymakers, I think, is okay, we have a clear task here. We can see the ways in which changes, some technologically driven, a lot of them policy driven, in recent decades have released the constraints, have changed the alignment so that the best ways to make a lot of money are not things that actually redound to the benefit of American workers, to the strength of the country. And we're going to have to do something about that. And so, on each of these dimensions, I think you can understand certainly a lot of the policy that the Trump administration is proposing, a lot that the sort of newer right of center, this is what the book is about, the new conservatives focus on is, okay, what does that look like? And so in terms of globalization, how do you change this so that those things that didn't work about globalization, because we forgot the assumptions we cared about, how do you make sure that those things work? And if you go back to the place where we started, right, what did we talk about? We talked about the way in which what you make actually matters. And if other countries are going to lean in heavily to build advantages in valuable sectors, we have to do that too. And that's where you see the newfound interest in industrial policy, things like the CHIPS Act to rebuild our semiconductor industry. Now a lot of interest in critical minerals as another example. It's where you see, the Trump administration's focus in particular on the balance of trade, on saying, yes, we would love to have high levels of trade, but it needs to be balanced. And so we are going to negotiate with countries because it is the policies of those countries in a lot of cases that are driving these imbalances. By the way, we have plenty of problems in our country too that we need to address those imbalances. And we're going to say we need to reach an arrangement so that the trade we have is balanced. And if we can't reach that arrangement, we're going to have tariffs. And partly those tariffs are a coercive measure to try to force agreement. But partly those tariffs are just good policy, that if we actually think producing things domestically matters, if we actually believe that very first line in the paragraph about the invisible hand, then in fact, prices should reflect that. And a tariff is a very straightforward mechanism for ensuring that prices reflect the relative preference we should have for making things in this country.
And you look at the past 20 or 30 years in America, and you compare that to the golden age, so-called golden age of capitalism in the 1950s and 1960s in America. What percentage of that difference do you think you can attribute to the fact that we have, before Trump got in office, very, very low tariffs of something like 2% versus we had higher tariffs in the 1950s and 60s? Or is it other policies as well?
I think it's important to say we didn't have very high tariffs in the 50s and 60s. In the 50s and 60s, we had what looked like a very healthy, well-functioning global economic system with quite balanced trade. Of course, we were coming out of World War II, where the rest of the world's industrial base had been destroyed. We were, in fact, actively working to promote the buildup of a lot of these other countries' industries and export capacity. And so it was just a very, very different context. Those economies and trading partners that mattered were all market economies themselves. And for the most part, developed with high labor standards and so forth as well. And so it's actually very funny. I love to point to the famous essay that Friedrich Hayek wrote in 1960. It's very tellingly called Why I Am Not a Conservative. And it was about the power of self-regulating markets. Even if you didn't understand why they worked, you had to have faith that they did. And he said, this is not a conservative impulse. And the problem with conservatives is they're not willing to just put faith in the market to accomplish this. But what's so interesting is that he gives a specific example of the self-regulating market. And the specific example he gives is that exports and imports will just find a balance. And if you look and you say, well, gee, he was writing it in the middle of exactly a 2-decade period where that did seem to be the case. So fair enough, I guess. The mistake came when we then assumed that was just automatically going to be the case, regardless of how conditions in the global economy changed. So I think, if you zoom out further, though, it's very important to note that until World War II, the US had among the highest tariffs in the world. The entire American model of economic development was to protect the domestic market. The Republican Party was the party of tariffs. And so, in fact, for literally centuries, it was not free trade, but a refusal to embrace the British Empire's model of free trade that was so important to the successful industrial development of the US. if we're looking at sort of, okay, well, what went wrong and how would we sort of, divide up the blame in a sense?
Mhm.
I think it's important to say that globalization is by no means the only thing that happened. I think, I mentioned three or four earlier. I think the sort of misunderstood model of global trade certainly is the primary impact on the manufacturing sector. But of course, the manufacturing sector is only one segment of the American economy and by no means the largest. I think it's that on top of the immigration policy that we pursued after 1965, on top of the financial market deregulation that we pursued, especially beginning in the 1980s, on top of our abandonment of industrial policy and belief that we no longer had to care about what we made or even how technological innovation progressed. I think from one side, in terms of the structure of the market, all of those things conspired to just lead to capital allocations that bore no relationship to what would actually be good for the country.
So there's globalization. I think of three different vectors. Kind of there's people, so immigration, capital flows, and then goods flows. So trade. So we talked about tariffs. You hinted at immigration earlier. Capital flows. How destabilizing was the deregulation of capital flows that happened in the 1970s and 80s? To what degree do you think that's responsible for the imbalances that we see today? And are you advocating for a restoration of some form of, even in a moderate form, capital controls?
It's a really good question because, of course, formally capital flows are just the inverse of the trade imbalances, right? The current account and the capital account are always going to balance. And so, as we were discussing earlier in terms of what went wrong on the trade side, it was in a sense that we stopped trading stuff for stuff and started trading stuff for assets. Some people argue you should actually look at it exactly the other way around, that it was the change in capital flows that have driven the trade imbalances, right? That as the US began to run very large deficits, as the rest of the world decided it wanted to store all of its savings in the US, it was really that imbalance that in turn drove the trade imbalance. I think there's some truth to that. I think that certainly was a factor. And when I mentioned we have plenty of policy problems on our side, the massive budget deficits we continue to run are certainly one of them. It's going to be very hard to balance trade while you're running a $2 trillion fiscal deficit. But I do think it's important to sort of step back and think about that story and say, well, like, wait a minute. We know that the rest of the world, those countries with which we have such large trade imbalances, were very explicitly and intentionally pursuing policies that were designed to build up their manufacturing and their export sectors. And we know that we have adopted policies that said that's fine, we don't care. In fact, we somehow think it's going to be really great for us if all of that manufacturing goes away. And then that happened. And so to say like, well, that was just a coincidence of financial flows, I think is bizarre and implausible. I think they're two sides of the same coin. And I think solving it, therefore, requires thinking about both sides. I do think for a number of reasons, some economics, some just a matter of political economy, it does make a lot of sense to focus on the actual trade balance and say, no, the thing that we need to actually focus on here is either producing more in the US to serve the domestic market or having significantly larger export markets for US production. But I do think it's important to recognize that we're not going to fix that without addressing the capital side as well. And one piece of that is just the fiscal situation. If we did not have the need to borrow so much to fund the government, which is not actually going to investment at all, it's going into consumption, that would be a huge step in the right direction. And then ultimately to your point, yes, I do think, on the capital flow side directly, I think something like a market access charge, something that recognizes that the massive capital flows into the US economy are not, the term is investing in America, right? As if look at all these countries that want to buy our treasury bonds so that we can, send that money out in entitlement payments. Like that's good because that's investing in America. No, that's not investing in America under any meaningful use of the term investment. In a world where we actually had high levels of real foreign direct investment in greenfield capacity, that'd be terrific. In the world we have, I think essentially charging a fee to the world if it wants to store its savings in our assets would both create better incentives and would be a nice source of revenue for us.
So the U.S. current account, which includes trade goods as well as services, was over $1 trillion last year. And as you said, the exact opposite of that is the capital account. So that means $1.13 trillion is what the U.S. was a net seller of assets to the rest of the world. Is your goal to get to zero, or do you want the U.S. to have a positive current account surplus? How would you gauge success? Because it seems as if President Trump views the existence of a trade deficit itself as a problem, rather than it causing negative things that are a consequence of that. And yeah, how are you going to be judging the successes of tariffs as they are enforced and as they maybe ratcheted up, in July?
The trade balance is partly a proxy, right? It is a metric that is calling attention to these more fundamental problems in the economy, in our trading relationships. That being said, I do think the trade deficit, because of what it says, in a sense, more about the asset outflow, is a meaningful measure in and of itself. And I think balance is the correct goal, not because it has to be exactly zero every year, but I think actually an analogy to the budget context is a useful one, right? The fiscal responsibility doesn't mean you exactly balance the budget every year. There are absolutely times when it makes sense to be borrowing. There are times when you'd ideally be somewhat in surplus, but that from a structural perspective, the sort of baseline needs to be roughly balanced, because otherwise it is not sustainable over the long run. And so I think balance is the right target. Again, not zero every single year, but structurally a balanced picture. And then I think the substantive things underlying that, or downstream of that we really care about. Obviously, by definition, one will be higher manufacturing output and a return to real growth in that sector. I'm especially concerned. I think maybe the best metric to watch carefully is productivity. Productivity growth has not only been slowing, productivity growth has turned negative in the manufacturing sector. Over the past decade, we've literally managed to get worse at making things, it's a little bit shocking, right? It's hard to believe that we have a well-functioning capitalist system when we literally need more workers in factories to produce the same output as a decade ago. And that in turn also speaks to some of the concern about the quality of these jobs, right? If our manufacturing sector was one that was at the cutting edge, that was getting a lot of capital investment, that was growing, that was investing in workforce, that was boosting productivity over time, these would also be much better jobs. It's a little bit circular to spend 30 years saying, we don't care about this industry, we're disinvesting from it. And then, well, as you can see, the jobs in it aren't very good, so we shouldn't care about it. That's probably not the right way to think about things. I think seeing more the immediate short run impact we should be looking at is capital investment, right? Because that is going to be a leading indicator before output rises. And that's something we already started to see significantly, just the effect of the CHIPS Act and the amount of private sector capital that got crowded in by the government commitment there was extraordinary. I think we need to see continuing building on that. We need to see, after decades of a sort of secular decline in real capital investment as a share of GDP, we need to see an increasing share of capital and increasing investment as a share of GDP. That then needs to actually lead to rising output and higher productivity. And if we're getting those things, then we will be getting most of the benefits we care about in the medium term, and we will be on the path toward a much healthier structural situation.
Investment in manufacturing, in manufacturing as a percentage of GDP, manufacturing output, and ultimately, yes, the level of the trade deficit. Thank you for laying that out there. Tell me about why you want to focus on output as opposed to maybe manufacturing employment, because in what a capitalist would call a paradise, what you might describe as hell would be a world in which infinitely productive manufacturing capability but employs one or two people. It is very good for consumption and production, but it's focusing on the production, not the actual people who produce it.
Yeah, it's a great point, and I think the answer is that there's a happy medium there. By definition, when I talk about the importance of rising productivity, I'm talking about relatively fewer workers in the factories, and that should absolutely be the goal. I don't think sort of manufacturing employment for its own sake is a sensible thing to focus on. I think manufacturing output for its own sake is to some extent a sensible thing to focus on because of the national security needs in particular. But the goal isn't just to create large numbers of low productivity jobs. The goal is to have a advanced, capital intensive, highly productive manufacturing industry, which by definition will therefore mean an industry that has better jobs in it. Now, how many jobs would it be? Obviously, it will be fewer jobs than you had in the 1950s, let's say, per unit of output. But that's fine. It will certainly be a lot more jobs than we have today when we don't have the factories at all. And I think really importantly, it's important to recognize the role that manufacturing plays, as the economists would call it, a multiplier effect. But at the end of the day, it's a sort of foundation of a local economy. We can be a services-based economy. We can be primarily services, but we can't all cut each other's hair. At the end of the day, especially if you're thinking about some region does need to make something the rest of the world wants in return for everything it wants from the rest of the world. And so, yes, are there cases where that could be services? Sure. And if you're New York City, if you're Hollywood, there are all sorts of tradable services for many, many parts of the country. The physical economy, whether you're talking about agriculture, natural resources, infrastructure, manufacturing, energy, that's where the tradable goods are. And those tend to be relatively high productivity jobs, especially for workers with lower levels of formal education. And they tend to then be jobs that allow for higher productivity and better jobs all around them. So there are all the supply chains, there's the suppliers, there's the logistics, there's the construction. One of my favorite examples is the Cato Institute, the libertarian group, put out this wonderful video trying to make the case that, globalization was great. It was a very, very strange video because what it showed was a town being decimated by NAFTA in the early 90s, going through sort of 20 years of despair, and then finally getting back on its feet thanks to a new manufacturing plant moving in. It's a Kia plant. And importantly, it is not a Kia plant that is exporting to the rest of the world. It is a Kia plant moving into the United States to serve the domestic market. And what it highlights is, yes, obviously those are fewer jobs in the factory than you had in an old textile factory, but those are good jobs. And then they look at the pizza parlor in town. And, there's actually an amazing clip of the Korean businessmen eating pizza in the pizza parlor, right? Because in a town with a highly productive Kia factory, the jobs in the pizza parlor can also be good jobs. If you don't have that, what you end up is what we've seen in wide swaths of the country, where it's actually a fascinating phenomenon. Essentially, the export from the community is need. The neediness, the poverty in the community attracts government benefits. And that is the actual sort of, to use mercantilist terms because they're actually appropriate here, that is the source of the hard currency and the way that the community actually attracts resources. And it got so bad during the Obama administration, you actually saw the Obama administration pushing for the importance of communities encouraging people to sign up for food stamps because that was good for the retailers in town, right? That's the ultimate nadir of globalization. But it's what you get if you don't take seriously these structural factors. And so my ideal is a highly productive, highly automated factory on the hill outside of town. It has some very good jobs in it for people who live in the town. It brings highly skilled, high income, highly trained people to the town who otherwise would be, I don't know, running a hedge fund or something. And it then creates opportunities up and downstream from it. It creates opportunities serving the people who work in it. And that is literally the premise of capitalism and rising prosperity through markets.
I think we talked about it was covered in the essay in your book, "Searching for Capitalism in the Wreckage of Globalization." What a title! But you brought up jobs. I want to ask you about another essay called "Jobs Americans Would Do." It can be a caricature, and I don't want to caricature. I want to totally be fair. But the argument is that people in Vietnam, they've got to make the shirts. Americans are not going to work in a factory to make shirts. The wages just aren't high. We covered that as well. There have to be people who come across the border illegally in order to pick lettuce and the like, because native born Americans are just not going to do that. That is what you're trying to address. What do you make of that argument? To what degree do you think it's accurate, or do you think it's a boogeyman?
I think it's important to say that that's not a character. That's literally the argument that people make. And my favorite example of this is I was debating the topic was immigration and wages with Steve Moore, who's a long time member of the Wall Street Journal editorial board, founder of the Club for Growth, a great representative of I guess, what I would call the old conservatives. And it was an incredibly productive discussion, because it was one of these ones where like we actually got to the nub of the disagreement, when he at one point, I was pointing out how our approach was like, sure, it was boosting stock prices, but it was also driving down wages. And he said, cheap labor leads to a booming stock market that benefits everyone. And I was like, oh, like, I don't have anything else to say here, because if you like anyone who agrees with that, like, vote for Steve. But it's a terrible, terrible way of looking at things. And so, I think it's really important to recognize that, to the extent that we think cheap labor is a good thing, we've really lost the plot. And again, going back to that paragraph about the invisible hand, the premise is that we want to have situations where the pursuit of private profit is aligned with the public interest. And in that context specifically, that the public interest is creating good jobs for people in a lot of cases. And so if we think of markets as solely responsible for delivering consumption at the lowest possible price, then yes, absolutely, the more cheap exploitable labor we can access, the better. If we actually see creating good jobs for people that allow them to support families and have dignity as an equally important thing that we need markets to do. Because, by the way, if markets don't do them, who is going to do them, right? The alternative, well, government could do it, I guess. And obviously there are plenty on the left who think that's the answer. But if you care about those things and don't want government to do them, you are going to need the market to do them. And so, whether you're thinking about working in factories, working on farms, working in construction, any of these places where the line goes that these are jobs Americans won't do, I think it's very important to say that these are jobs that we decided to create that Americans won't do because we offered somebody else to do them. That the notion of jobs Americans won't do could not exist unless we had someone other than Americans to do them. Otherwise, what would they be? I guess they would be job listings. But I like to say, like, well, I actually have this incredible startup idea. It's a biotech firm, and I currently have 40,000 job openings for biotech PhDs working at $8 an hour. And I can't find any. It's a terrible worker shortage. I guess these are jobs Americans won't do. Now, we recognize in many sectors of the economy that, of course, if you want to employ somebody, you're going to have to offer wages and conditions in which they will work in the job. And of course, that is one of the determinants of what that product or service costs. But then for some reason, and I'm pretending to be confused, it's because it's a different set of people who would be doing these jobs. We look at these other sectors and just look down upon them as things that will obviously, these cannot or should not be dignified jobs. And so we need to have a policy environment and an economic environment where the way the work is done it cannot be done with Americans. And, I think it's just always very interesting to like stretch, like just push the thinking on this a little bit. And this is, the essay you mentioned, Jobs Americans Would Do, starts with this idea, because I sort of envision two people offering jobs at $14 an hour in hot, dusty fields 2 hours south of Silicon Valley. One guy is trying to develop artificial intelligence, and the other guy is trying to grow lettuce. And neither of them can find anybody. And the guy trying to develop artificial intelligence sitting on dusty crates at $14 an hour, we say, like, well, that guy's an idiot. Obviously, that's bad. And the guy trying to pick lettuce that way, we say, oh, Americans won't do those jobs. We need a temporary worker program. When in fact, the exact same answer should be given to both of them, which is, well, then that's not how you should run your business. And does that mean that lettuce will be more expensive? A little bit. Yeah, certainly in the short run. But it's very strange to me that it is exactly the people who profess to love free markets and want to keep policy out of the way that seem to know what lettuce should cost. And if lettuce doesn't cost that, then they have like very aggressive policy interventions that they think we need to make sure that that is what lettuce costs. When in fact, we have just been eating aggressively subsidized lettuce. And if you do want to aggressively subsidize lettuce, the way I would do that is by subsidizing lettuce, not by destroying the job market, throwing out what could be good opportunities for millions of Americans doing important work, contributing to their communities and supporting their families, and in the process, by the way, creating an entire exploited underclass of sort of quasi American labor.
And so the fact that worker wages have not kept up with productivity, you see that as a problem. 20 years ago, if politicians acknowledged that as a problem, it probably would be more likely to be Democrats. Would you say that there are a lot of Republicans who see that as a problem as well? And Republicans who are willing to be as activist and bold in policy prescriptions as you are?
Oh, I think definitely. I think the one caveat I would make is I don't think it's quite right to say that wages haven't kept up with productivity because the productivity measure tends to be an average and the wage number tends to be a median. And I think the best evidence suggests that wages have roughly kept up with productivity, but productivity has been distributed very unequally. That, again, because of this set of incentives we created, we've seen enormous investments in boosting the productivity of one class of worker. And by the way, in a somewhat circular way, we then measure their productivity as very high because we're paying them a lot to do these things. And we've said for another class of worker, productivity does not matter at all. Then we now see declining productivity in the manufacturing sector. Best estimate is that construction sector productivity has been declining for 50 years. And so when you then say, like, well, I guess we need immigrant laborers to be roofers, it's like, well, yes, after 50 years of saying every time it's hard to find someone to do roofing, the answer is not to create a better job and invest in productivity and develop new tools. It's to probably hire an illegal worker. Yeah, no kidding. And so I think it's actually that divergence in productivity that is in many respects the greatest indictment of our system and speaks to the way that, yes, capital behaving rationally maximized its profit, and this is who it worked for, and this is who it didn't work for. I do think it's absolutely the case that you see people on the right of center, the folks that I would call the new conservatives, both acknowledging the fact of this, and it's fascinating the extent to which we still have to fight about the fact. There are an awful lot of people on the old right who see their entire job as being to argue that none of this is even happening. Because if we acknowledge that there were any problems here, oh my gosh, we might have to do something about them. So how many creative ways can we come up with to argue that there isn't even a problem? And so it is, in fact, even just significant that increasingly you have a Republican Party, a conservative movement that is willing to acknowledge these things are problems. And then once you acknowledge that they're problems, you then have a lot of really good, robust discussions about what to do. And I think it's important to note, this is typically the point in a conversation where someone will say, like, well, then why aren't you just a Democrat? And because if you go back through everything we've just talked about in this conversation, none of this is what Democrats are actually talking about. I mean, Democrats are now aggressively anti-tariff. Democrats remain anti-immigration enforcement. Democrats, for a number of both political and ideological reasons, political meaning kind of who their constituents are, and ideological reasons, don't actually have any interest in addressing these structural issues. They have a lot of interest in creating big government programs to compensate for it, to make sure that everybody has more pie on their plate. But the idea that the choices that we have made are simply incompatible with the fundamental interests of the typical American worker and family is not something that I see Democrats willing to grapple with very seriously at all. Whereas, certainly on the trade issue, President Trump has been out on this issue for a decade now. I think, folks like J.D. Vance and Marco Rubio particularly are articulate very well this broader case about the need to focus on worker interests and productivity in the way that these forces have gone astray. And then I think you increasingly see, in the Senate, especially the next generation of folks coming in are very much oriented this way. Obviously, Senator Josh Hawley has been very outspoken, and, the renewed interest in organized labor. And, yes, we have a lot of problems with big labor today, but a belief in the importance of worker power as one of the ways of addressing this is something that you see a lot more interest on in the right of center. Senator Bernie Moreno, who's just come in from Ohio, has been working with Senator Hawley on a lot of the labor issues. He's also been very outspoken on private equity and the ways that a lot of what private equity does is wildly counterproductive. Senator Jim Banks, who was previously in the House from Indiana, is a very strong advocate on some of these issues. David McCormick, coming in Pennsylvania, is especially focused on industrial policy and how do you kind of get investment going back where it needs to go. And so, elected officials will always be something of a lagging indicator, right?
Mhm.
Are Mitch McConnell and John Thune suddenly going to embrace all of this? No. But if you look at the direction things are headed, if you look at where younger conservatives, certainly in the movement more broadly, journalists, lawyers, economists, think tank folks, are all oriented this way. And then as you see that now bubbling up all the way to the highest levels of national leadership, I think there's a lot of cause for optimism.
Or we're recording this in late June. This will go live in late June, early August. I believe it is July 8th, which is 90 days after President Trump gave a 90-day exemption or reprieve on all countries that aren't China for tariffs. So tariffs have been quote unquote only 10% for the past 80 or some days. Just how far are you willing to go? How far do you think is too far? Because at least in rhetoric or things announced on Truth Social, President Trump has gone incredibly far, as high as for a few days, 145% tariff on China. What is an appropriate level? Okay, tariffs were roughly 2%. You want them a lot higher. 3% is not going to cut it. They're currently at 10%. But I mean, are you willing to go to 145? What is going to take for you to say, hey, this is too much. We need to have moderation. And also, what is too little? Is 10% too little?
I think the 10% global tariff is a good place to start. The two policies we've been very supportive of at American Compass and pushing for a long time are a 10% global tariff and then escalating tariffs on China. If you look at where we actually are on China, it depends how you measure it. 30% going on 40% is probably the best estimate. With China, I don't think there's a deal to be had. I think the reality is that we need to move toward a long-term decoupling and an insistence that our allies and trading partners are either with us or not. If you want to go be in the Chinese sphere, that's fine. There's going to be a Chinese sphere. But we're not interested in something where, we put up barriers to China, but China just sells the stuff to Vietnam and Japan and they sell it to us instead. So I think that decoupling is very important. It's something that's going to take time. And so I think the best model, there's very good legislation in the Senate. It's co-sponsored by, I guess it's, let's see, Josh Hawley, Tom Cotton, and Marco Rubio, who's of course now Secretary of State. It has bipartisan support in the House to actually revoke China's permanent normal trade relations and then ratchet up tariffs steadily on strategic goods all the way up to 100%, but over a period of about 5 years, I think. And so are we at the right spot today? Frankly, I think we could be a little bit lower today if we had a clear path forward. Here's how it is going to ratchet up. But generally speaking, I think that is the right approach on China. The question is what to do with everybody else. And that's where I think, the model the administration has pursued of saying we have these reciprocal tariffs. Essentially, we don't want to have these tariffs. These are the backstop that are intended to push people toward a different relationship with us, I think is good. I think, frankly, what we're going to need as we come to the end of this 90 days is just a clearer definition of, okay, what's in versus what's out. Because obviously we're not going to have all of the agreements sewn up in July. And so I think what we're going to need, again, for the long term, you need a lot more clarity and certainty if you actually want to influence how allies behave, if you want to influence how capital flows. What we're going to need is a very clear definition of, if you want to be sort of in the core American, it's going to be an economic and security partnership, here are the requirements. Some of them are going to be defense related. Some of them are going to be about bringing trade into balance. And some of them are going to be about maintaining a unified front toward China. If you are not up for doing those things, then here's the tariff rate. Because at the end of the day, we would like to have as big and broad a free trading zone as we can. But we are not going to pretend the term free trade applies where that's not what we have. And so, I know certainly the administration has been doing a lot of work with all these negotiations in trying to define what exactly does that look like. I think success at this point would be establishing that very clearly, and so that everybody can understand, look, here are the different buckets, and here's how you're treated by the United States, depending on which bucket you're in. And to some extent, I think it's important to say there's a sort of like no harm, no foul element to this, right? It's not China is bad and violating some higher principle by virtue of wanting to adopt its model. It's its own country. It can adopt that. If other countries say, yeah, we really love having Chinese stuff dumped into our market and hollowing out our industry. Okay. That's going to affect how you get to trade with the US too, right? The US is not going to be this sort of benevolent hegemon presiding over what we hope will be a global liberal world order and absorbing all of the imbalances within it. And I think countries are going to quite rationally see that what the US has to offer is a lot more attractive than the alternative. But I also think this is a period of transition, and it took us 25 or 30 years of incredibly bad decisions to get to where we are, and it's going to take some time to get back out.
So 10% or lower, I believe you said, or lower on non-China countries, but you advocate for an aggressive, although gradual decoupling from China. What would be necessary for a decoupling from China? Like, I think the way China has a huge trade surplus with us, it doesn't. I don't believe it has very high tariffs. At least that's according to the WTO, like what I looked up. But there are very high non-tariff barriers.
I think it's mostly non-tariff barriers, and non-tariff barriers can mean different things. Sometimes it means like, well, we have a regulation that basically keeps you out. With China, it is a much broader systematic incompatibility. I mean, at the end of the day, all corporations in China are answerable to the Chinese Communist Party. A huge share of them are directly state owned. The basics of their cost base, whether it's what they pay for land, what they pay for energy, what they pay for capital, those are politically dictated. Obviously, the rights and opportunities available to workers are politically dictated. And so, the idea that like, oh, well, like if China would just change this regulation or sign that free trade deal, like we could fix this, I just don't think is plausible. And, again, this idea that you would have like a global unified world order is a really bizarre end of the Cold War, end of history kind of mindset that we never had before. And there's no reason we should believe is in fact a plausible goal. And I think that's saying that the Trump administration has taken a different approach on than prior leadership in a very constructive way. And Secretary Rubio in particular, going right back to his first week on the job, I think it was in an interview with Megyn Kelly, gave a very important answer on this, where he basically said like, look, this is a descriptive matter. It doesn't matter whether we wish we had a liberal world order or could have U.S. hegemony. That's over. That China is a peer adversary. It has a different system, and the question is, what should our policy be in that reality? And it's not going to be an exact repeat of the first Cold War, but I do think there are some important lessons to learn in going back and watching how did we think about that, right? Friedrich Hayek and Milton Friedman weren't out there saying like, well, obviously we should have free trade with the Soviet Union. That would have been insane. It was taken for granted that when you said free trade, free market, and so forth, you meant with other market democracies. And it was only after the Cold War when we had this illusion that everyone was going to be a market democracy that we then built to this assumption that, well, okay, then free trade just means total global free trade. And so just as, where we started talking about like what are the wrong assumptions from Econ 101 that got mapped onto the global trading system, there's also this sort of wrong set of assumptions from Poli-Sci 101, where everything we were doing assumed a certain structure to the international system and certain models for all of the countries in it. And that's not the world we have. And so whatever ideas we built on an assumption that we would have that world need to go out the window. And fortunately, we have models from the past of other ways the world has worked that were just fine for the United States. And I think we're headed much more in that direction.
Or my final question for you is that it can appear that President Trump's true desires can sometimes change quite quickly. For example, he was very aggressive on tariffs from the beginning of his administration until the roughly the early middle part of April, and he's since moderated significantly. We've seen recently his Middle Eastern policy has not vacillated is a negative way to put it, but his goals have changed a lot, and he can appear mercurial. So there's the Navarro wing in the Trump administration. There's the Bessent, more moderate wing on trade. Which President Trump do you think we're going to see over the next few weeks and months as these critical tariff dates come in line?
Look, I'm the first person to criticize the specifics of Trump administration policy when I don't think it's the right policy. But I think that characterization of sort of Trump and his actual goals and desires um, is wildly unfair and disconnected from reality. I mean, on trade, as one example, he's been extraordinarily consistent in what he cares about and what he wants for the United States going back decades at this point. I mean, on Iran, he's sort of, again, the people are going back to like, here's what he said in 2011 about Iran can't have a nuclear bomb. And so I think you're entirely right to point to the ways that the tactics shift. Sometimes
Mhm.
it seems like, frankly, it's somewhat on purpose. Other times it's clearly a course correction. But I think that's what we've seen, certainly on trade, is a very clear through line on the goal and changes on the tactics as they figure out what works and is a good idea and what doesn't work and isn't such a good idea. I think you're right that there are definitely factions within the administration, as there would be in any administration. But I also think it's notable how different it looks than the first Trump administration. In the first Trump administration, you had in key roles people who did not believe in his direction, right? Mnuchin at Treasury, Rex Tillerson as the initial Secretary of State. These were not people. Larry Kudlow at NEC. These were not people who saw the need to be changing anything. And I think if you look at across the board, the set of appointments from Mike, the distance from Mike Pence to JD Vance is in a sense all you need to know. But the distance from Mnuchin to Scott Bessent is every bit as dramatic, right? The distance from Kevin Hassett to Stephen Miran at Council of Economic Advisors, obviously from Tillerson to Rubio at State. What you have now is a team that I think is very well aligned on the theory of the case. And so I think it is safe to assume that that is the theory they are going to be pursuing. It is, in a sense, unprecedented, certainly in modern times, as a shift in the grand strategy of the United States. We saw one change in grand strategy, both militarily and economically, with the end of World War II. That was when containment started. We saw another one at the end of the Cold War, when the sort of era of benevolent US hegemony started. And now we're seeing a shift to a new one. And I think it will take time to figure it out, but I think it's a very good thing that it's happening.
And final follow up, you so Trump 1.0, in his first administration, visibly said he paid a lot of attention to the stock market. How attentive do you think President Trump will be to financial conditions, both in the stock market and the credit market?
Well, I think what you have seen from the administration is that it is still a factor, but it's certainly less of one than it has been in the past. And I think that's good. I do think it should be a factor insofar as it does matter. I mean, nobody wants a financial crisis. The flip side is that day-to-day changes in the stock market don't tell you anything about what is actually good US policy in the long run, especially in a world where the whole problem is that corporate profits are not well aligned with the national interest. And so, I think what you'll see is, on one hand, a significant appetite for, a stock market correction, but on the other hand, a careful tracking of, okay, how are bond markets reacting? How is the dollar reacting? Because that's important data. And I think it's quite striking. I mean, you sort of you caught yourself earlier in the discussion noting that, like, we're now at a 10% global tariff and 40% on China, and that's the new normal, right? Markets are up, dollars down a little bit, bond yields seem pretty stable, inflation is down, consumer confidence is up. I don't think it's always going to be this smooth, frankly. I think we'll see all sorts of disruptions, but it is already clear that the narrative advanced by the economists who said, no, you can't do any of this, was wrong. They, they knew as little as this time what they were talking about as they did last time. And that's unfortunate. I wish we had an economics profession that was a little bit less ideological and more fact-based. And I think that would provide much better advice to policymakers. But we are where we are.
Oren, I'm so glad you could join us. People could find you on Twitter at Oren_Cass. Your your think tank, AmericanCompass.org, and the book, which is out recently in June, The New Conservatives, Restoring America's Commitment to Family, Community, and Industry. People have got to check it out. We will link to that in the description. Thank you again. Thank you, everyone, for listening. A reminder to check out Monetary Matters, not just on Monetary Matters on YouTube, subscribe, but also on Apple Podcasts, Spotify, and wherever else you find your podcasts.
Thank you.
Thanks for watching. Remember to click the link in the description to learn more about the Teucrium Agricultural Fund Benchmark Index. Until next time.
Thank you. Just close the door.